This is Chairman's Briefing, where we keep you in the know on metals and money. My name is Rachel Lee, and this episode is in partnership with Viva Gold. Gold and silver are consolidating after recent rallies pushed both metals to multi-year peaks. Profit-taking from short-term traders has created some pressure, but safe haven demand from geopolitical uncertainty and the U.S. government shutdown continues to support prices. The Federal Reserve released minutes from its September meeting, showing that officials expect 2 more quarter-point rate cuts by the end of the year. Most members favor further easing, but remain cautious over inflation concerns. Bond traders are anticipating increased volatility once the government shutdown ends and backed-up economic data begins to flow again. Pent-up reports on employment and inflation could complicate the Fed's decision-making and create further turbulence in the Treasury market. The delayed data makes it harder for the Fed to assess whether additional rate cuts are warranted. If economic figures come in as outliers, markets could see jumpy price action. But for now, lower rates and ongoing uncertainty remain supportive of precious metals, even as short-term positioning adjusts. Gold has broken through $4,000 an ounce. But Bernard Dada at Natixis sees potential turbulence ahead in the next 2 to 3 months before gold resumes its climb in 2026. The concern is what happens when sentiment shifts. Dada points to similar rallies that ended with 5 to 10% drops within days during the 2011 debt ceiling crisis, the pandemic in 2020, and the 2022 Ukraine war. Margin hikes could force leveraged traders to sell, and profit-taking could accelerate. The bigger question is what happens when the government shutdown ends. Past shutdowns under Obama and Trump saw gold lose momentum once resolved. But the bullish case is this. Money is fleeing U.S. treasuries at a historic pace. And in just 2 weeks after Liberation Day, $150 billion left money market funds. So even a small rotation into gold could send prices up another 10%. The risk is demand destruction. At these levels, jewelry buyers are walking away and central banks are slowing their purchases. Together, they represent 70% of global gold demand. This market is running on fear and liquidity. Goldman Sachs has raised its gold price target to $4,900 per ounce by December 2026, which is up from $4,300. The bank pointed to strong Western ETF inflows and continued central bank buying as the drivers. Goldman stated that the risks to its forecast remain skewed to the upside because private sector diversification into the relatively small gold market may push ETF holdings higher than expected. Goldman expects central banks to buy 80 metric tons in 2025 and 70 tons in 2026 as emerging markets continue to diversify into gold. Western ETF holdings are expected to rise as the Federal Reserve cut rates by 100 basis points by mid-2026. Goldman noted that speculative positioning has remained stable, suggesting that recent ETF strength is not an overshoot. The commodity team at Bank of America is one of the biggest gold bulls on Wall Street, and they're now warning that the rally may be running out of steam. Paul Sienna is the bank's technical analyst, and he said that gold appears overbought as it crossed $4,000 an ounce. His advice for investors is to consider taking profits or protecting their gains. Gold has gained over 50% this year, which is its best performance since 1979. But Sienna warns that the 7 consecutive weekly gains we've seen have historically been followed by lower prices 4 weeks later in all 11 prior instances. The metal is trading 21% above its 200-day moving average, which is a level where peaks are increasingly common. It sits 70% above its 200-week average, a condition seen only 3 times before in 2011, 2008, and 2006. Sienna does not rule out further upside to $5,000 or even $7,000 if this rally mirrors past bull markets. But he warns that the current move is mature and vulnerable to a correction. Viva Gold is advancing the Tonopah Gold Project in Nevada, one of the most prolific mining districts in North America. Tonopah historically produced over 174 million ounces of silver and 1.8 million ounces of gold. Viva now controls a large land package with existing infrastructure, including roads, power, and water, which reduces development risk and capital costs. The near-surface, high-grade oxide portion of the deposit is ideal for toll milling, while the lower-grade disseminated material is amenable to heap leach processing, as considered a proven low-cost extraction method. CEO James Hesketh and I talk about the project's economic potential that was released to the market just 2 months ago. You can watch the interview above. Investors who see the gold trade as too crowded are rotating into silver. Louis Vincent Gav at GavCal Research notes that once a bull market in precious metals starts, it usually takes a hawkish Federal Reserve or a sharp rise in the dollar to stop it. Neither appears likely right now. Silver could climb further if the dollar weakens, spurring more international buying. Paul Wong at Sprott Asset Management argues that for silver to keep rising, demand must shift from low-value uses like photography to high-value applications like AI. If silver breaks above $50 sustainably, it could signal a repricing of the metal's economic worth. President Trump approved the controversial 340-kilometer Ambler Road, unlocking access to some of the richest copper deposits on the planet in northwestern Alaska. Following the approval, the U.S. Department of War announced that it'll take a 10% equity stake in Trilogy Metals, which is a Canadian explorer developing the Upper Kobuk mineral projects with Australian partner South32. Shares of the company screamed higher when the market opened on Tuesday, October 7th. B2 Gold declared commercial production at its Goose Mine in Nunavut just 3 months after pouring first gold. The milestone was achieved after 30 consecutive days of mill throughput at 66% of design capacity, processing about 2,600 tons per day. Goose is expected to produce between 80 to 110,000 ounces in 2025, ramping up to 330,000 ounces in 2027. Over its initial 6 years, the mine will produce approximately 300,000 ounces on an annual basis. The Back River Gold District holds a resource base of 9.3 million ounces at grades that exceed 5 grams per ton. Sokoman Minerals secured mineral licenses along the Valentine Lake Fault in Newfoundland, which is the same structure that hosts Canada's newest producing gold mine, which is operated by Equinox Gold. The acquisition positions Sokoman as the largest landholder by strike length along the regional fault. The company also recently appointed Denise Laviolette as executive chairman and CEO. Laviolette founded Newfound Gold, which made one of Canada's most significant high-grade gold discoveries in Newfoundland. Copper surged to a 16-month high of about $10,800 per ton on Wednesday after Teck Resources slashed its 2025 production target. The company now expects up to 190,000 tons, which is down from up to 230,000 tons. Copper is up 23% this year on growing supply fears. Freeport declared force majeure at its Grasberg mine in Indonesia after flooding killed 7 workers and halted production. Analysts at Jefferies are warning that the world is facing unprecedented copper supply disruptions, and many are not short-term fixes. Citigroup is forecasting that copper could hit $12,000 per ton in the first half of next year as supply cuts intensify and disrupted mines stay offline. And that's your briefing for this week. If you're not subscribed yet to our channel, do so before you go, as it does mean a lot to us. My name is Rachel Lee. Thank you for watching.